Welcome to episode 2 of our Black Diamond video series. Today I'm in the office and I thought we'd talk about something that is a little bit basic to mergers and acquisitions, but it's a question we get pretty often, believe it or not, and it has to do with if you own a company, what are some of your options for getting capital for growth before you want to exit? So we're going to talk about 2 of those options today. Let's take an example of a company where we're going to call it ABC LLC. And inside of this company, we have 2 owners. Okay, we've got an owner, we'll call her Jane. Jane owns 60%, and she has a business partner, Bob. He owns 40%. So if their plan is to go get some money for a growth program so that they can increase the value of their company long term, one of the things they can do is they can look at valuing their company today and then going and finding a third partner that will invest with them in their company. So just some terminology, our ownership or equity in our LLC here is really termed a membership unit or membership units. If we were dealing with a corporation, then this would be equivalent to shares or shareholders. So let's say that they want to go get $2 million for their growth program. So that's their need is going to be $2 million. They come together and say, okay, look, let's each give 10% of our membership units to someone else, and then someone else comes in and they bring the $2 million for the growth program. So then Jane would go from 60 to 50. Bob then his ownership would drop to 30, and then they've got a new person that will end up with the other 20%. So for 20%, I'm investing $2 million into this private LLC. Then they go through their plan. Hopefully the business grows and it's worth more money, and then they can sell it at a higher valuation when they're ready to exit, all 3 of them. That's option 1. The second option is a more traditional route, and that is if Jane and Bob get together and they say, look, we really don't want to give up 10% each because we think the company's going to be worth a whole lot more down the road, then our second option is going to be more of a pure debt instrument, or really a loan. Of course, you can go to a commercial bank, and if you have enough assets on your balance sheet, if you're ABC LLC and your cash flow is strong enough, then a bank will give you a loan for that, and you would work through the traditional banking mechanism, and you don't give up any membership units for that. The second option, compared to a commercial bank loan, is going to be a mezz loan. Okay, a mezz loan can be a good tool for business owners short term, because even though you might pay a higher interest rate, sometimes we'll see deals that are going to be anywhere in the 11 to 15% rate. It can be interest only for a short period of time. So for interest only, you can get this capital that you need to grow the company, and then you can pay it off when you've met certain objectives, and you're not giving up any equity. So the trade-off is a little bit higher interest rate, but you keep your ownership, and then when you're ready to exit, you'll have more of that share back in your own pocket. So a couple options there just to throw out. If there's anything we can do for you, please reach out and let us know. Thank you.